Good afternoon. Happy Wednesday, everyone. I am coming to you with this impromptu broadcast because we are seeing a major reversal in the mortgage-backed security market, the MBS market. I am Sean Richard. You are watching SRT Live. Thanks so much for joining me on this quick broadcast. If you're watching the replay, thanks so much for checking it out. And this is I'm coming to you because I wanted to just really illustrate the volatility that we're in. I think a lot of you know how much volatility that we're seeing. We've got the conflict in Russia, or I'm sorry, in Ukraine. We've got the Fed meeting that's coming up a little bit later this month. We've got inflation running amok. We've got supply chain issues across the board. And we are in just a whirlwind of economic craziness, economic and social craziness. So I wanted to come to you because we are getting a major reversal in the mortgage-backed security market, the mortgage bond market. If you've heard me speak on this before, mortgage bonds, mortgage-backed securities have a direct impact on interest rates. They are directly related, unlike things like the 10-year Treasury or the Fed funds rate, which is what the Fed has been talking about increasing. Those have an indirect relationship with mortgage rates. So what are we seeing? Well, let's take a look at the chart real quick. So let me share this for you. Let's go a little bit bigger. There we go. All right. So this is the chart of mortgage-backed securities. We are down 103 basis points. So if we look at the last 3 days, we have gone from a low of 99.984 right here, and we peaked yesterday at a high of 101.703. So we're talking 170 basis points from trough to peak, which is a massive amount. We're talking like, probably a 0.25% change in rates is what that might cause. And so the reason for that is because of the conflict over in Ukraine, and it created a lot of uncertainty. We saw a flight to safety in the markets. You had a lot of investors, both personal and institutional, that were pulling money out of equities. The stock market was tanking, and they were moving to safer investments like bonds, which includes mortgage bonds. So we saw the price of mortgage bonds rise, and we saw interest rates decline. Now, that being said, the Fed came out, and we heard from Jerome Powell today, and he had commentary essentially in a nutshell stating that despite everything that's going on, they feel that it's still necessary to continue with the Fed funds rate hike. And so that brought the inflation and the Fed funds rate hike into prime focus. And really the Ukraine conflict took a backseat, even though it's still very priority in the news. As of today, that's taken a backseat to what the Fed came out and said. And we're going to hear from Jerome Powell again tomorrow. We also had the State of the Union last night with President Biden. And so that had an impact as well on where we opened today. And we've seen a major reversal. So we are all the way back down to, look at this, 100.58. So we've lost 110, 120 basis points from our peak of yesterday. And now we're in this pretty wide range right here. And so that anytime we're trading in a wide range for mortgage bonds, that means we're open to a lot of volatility, which is no different than what we've been seeing for the past, really since the beginning of the year. We had some stability, just kind of up and down movement here. But overall, we've had quite a bit of volatility since the start of the year. So I wanted to come out and share that with you. There's a good chance that the 3 days that we just recently had where we saw a slight dip in the rates after an increase in rates, these 3 days represent the only time that we're going to see the rates really dip for the foreseeable future. So we want to keep an eye on everything that's going on. The Fed meeting in March is going to play a big role, but I think the market is already pricing that in based on Jerome Powell's comments today. We'll see what he says tomorrow. So I bring this to you only to say that we are still in a rising rate environment. We had a quick, short blip of improved rates. And I was fortunate enough to get a lot of clients locked in yesterday. And so we are back to rising rates, and have that conversation with your clients. Have them reach out to me if they have any questions. You and or they can reach me on my cell phone right here. Leave comments below, and tune in here at 3 o'clock today. I've got a video going out to you guys talking about this week's market update. Should have went out yesterday, but I don't know how to work technology apparently, so it's going to come out to you today. But thanks so much for joining me. Have an incredible rest of your Wednesday. Take care.